Okay, at this moment, the market sentiment is slightly bullish. Okay, and this is the reason. The reason why it's bullish, right, is that everyone is expecting a vaccine to be coming out soon. They have been mentioning for weeks after weeks. That a vaccine is to be expected soon, and especially the medical and the tech sector are in a euphoria mood. They are really running quite crazy at this moment. Okay, so the reason for all this is that now have a specific event which is COVID-19 pandemic. So based on this World Health Organization, the COVID-19 now we are in the 127 days into this pandemic, all right, which is like 4 months plus, and you can see globally we have about 5.4 million cases, around 300 over thousand deaths, in the whole world. So this is what is driving the whole global markets at the moment, creating a lot of havoc, um, stopping air traffic, trades, and even lockdowns, where people could not go out of the house. So in such a situation, what are the sectors that usually benefits from this? The sectors that benefits from this is firstly mainly the medical equipment sectors that is running. Then of course companies that can still operate during this lockdown period. So these companies that are good are usually the technological companies, tech manufacturing, internet softwares, Netflix, video streamings, and online shops, online stores, and retail outlets. Not really as the physical outlets, but online stores. So these are mainly the sectors that we can look at, to benefit in this current situation at the moment. So on the global market overview, this is the S&P 500 index. Okay, and right now, as of yesterday, the S&P is trading just below the 3,000 point, and this whole rebound is roughly about 65%, of this drop, which is quite a strong rebound as compared to most of the other countries. Now, as of yesterday, due to the move up, and there's a tremendous volume and it closes poor, which means to say they are already kind of like institutional selling happening. Okay, so this is really a bull and bear fight, and there's a lot of volume here trading around. And main thing is also to look at around in this area where there's a lot of volume trading here, corresponding to here, which is this whole area. So this whole area, what we are expecting is a whole lot of resistance and a lot of transactions will be happening in this space. The fight between the bull and bear. All right, this is the Hong Kong market. Similarly, due to the COVID virus, yeah, this crash, and it forms a kind of a flag pattern at the moment. Now, this drop is caused by the Hong Kong protests that happened last Friday, but quite surprisingly is that coming this week, right, it opened very strongly. It rebounded, and this I think caught many people by surprise because they are expecting the protest to last longer and expecting a deeper drop in the market. So the only explanation I can think of at the moment is that it's the second time happening, and people are not taking this protest too seriously. It's somehow it's going to be resolved. Okay, so this is Hang Seng Index at the moment. We want to trade the index and not try to pick stock. We can look at the Hong Kong Tracker Fund. Okay, so this is the Hong Kong Tracker Fund that it invests in the 50 Hong Kong constituent stocks. Okay. Now, as someone has asked about the gold outlook, let me take a few minutes on explaining this gold chart. All right, this is the gold futures chart on the monthly. So each bar see is 1 month. All right, and I'm just using the 50-day moving average. So it's roughly this is like a annual yearly moving average. So we can see that gold had a tremendous bull run. from the year 2000 all the way to 2012. And this period, right, is being funded by the three quantitative easing done by the US government. And in 2014, they stopped the QE, and that's how the gold has maintained sideways, for a few years. Now, due to the US and trade, US and China trade tension, gold started to inch up and move off. And with the pandemic happening, somewhere in January, February, it shot up and test the so-called main resistance, 1,800 points. Okay, so as of this chart, this has made a very nice cup pattern. Okay, and for those who have known me long enough, my favorite pattern is the cup and handle pattern. And for this to form a nice handle pattern, right, it'll take probably like another 4 to 6 months. So my guess is if we take 4 to 6 months into the calculation, that's be November, December, and that coincides with the U.S. presidential election. All right, so something during that time might occur and may cause a catalyst for it to break up on top. So that's what I think is a possible scenario. And the target for this break is most likely to hit 2,500. How do I get this is based on the base that they have formed. All right, here. So it has formed. So this is roughly the potential target for the gold movement. So in order to trade in the gold futures requires a lot of capital upfront. So easy way is to invest in the gold ETF, which is also listed in the SGX. Now on our local market, this is the Straits Time Index. Okay, this is the Straits Times Index. We had this fall due to the virus, and it forms a flag pattern, kind of weak, and then it gaps down, due, coinciding with the Hong Kong protests. And disappointingly, we did not have a strong rebound. All right, so we've been trading sideways. So it's like in terms of compare among the Asian markets, Singapore is quite weak compared to Hong Kong and China. Okay. So for the investors portion, what should we be looking at? 2 weeks ago, I mentioned about Sassia REIT. Okay, this Sassia REIT has formed a nice come and handle pattern, and it broke off last week. Okay, 2 weeks ago, this is somewhere I mentioned that I'm expecting this to move off to about 81 cents. Last week it broke off, and today it had a move also, mainly because tomorrow is the XD for the dividend. Okay, so in the next 1 week, most likely this will stay. You'll get down like about 1.5 cents and trade sideways. So if you were to be able to trade above this support point, um, it'll be good to accumulate, um, and hold on the longer term on the upside. Okay, so this is Sassia REIT. Past few weeks I've mentioned about SPH REIT, mainly because it has a 23% exposure to the medical center, their Paragon Medical Suites. Okay, and this moment it has formed a very nice pattern over here, waiting to break this resistance of about 81 half to 82 cents. All right, and with this break, right, I will expect it to move off to about probably 87 half or 88 cents. Okay, and as of this price is roughly about 5.6% dividend yield, P12, with a price to book of about 16% discount to its book value. I was hoping that this stock can able to hold off till I make this presentation, but it seems like it's too eager to move off. This is Lendlease REIT. Currently have two properties. One is the 313 Somerset, and another one is the commercial office in Milan, Italy. All right, so previously what I'm looking at this is that it has formed a very nice pattern over here, and I'm expecting it to be moving off. And today it break off this intermediate resistance here at about 60 cents. Okay, and there'll be another resistance here at about 63 and a half. We should be mindful of. If you can pull back around this area, we can also look for opportunity to enter on the long side. So what I mentioned about land lease is that recently it has been added into the MSCI small cap index, which means to say funds that are tracking small cap stocks, they will definitely be buying into land lease REIT. This news was only roughly about, I think, last week's news. And based on previously when I was studying this is 59 cents, is giving about 8.6% yield, and with a price to book of 0.7, okay, which is a 30% discount to its book value. And considering it has a 303 Somerset property in its portfolio, I think it's quite a valuable property. Okay, now another stock that pops up is Union. Union Gas, yeah, they provide gas bottle for um, people or SMEs or hawkers in Singapore, and it's mainly about 50 to 60% family owned. So recently it has quite a nice run, and why I brought this up is that it has roughly about 6.8% yield, trading at a PE 7, and I mean in terms of gas and bottling, their PB is about quite high, it's about 2. Okay, so if you're looking like in terms of nice earnings and dividend yield, stable earnings, you can also look at this company. It's a small cap, about 58 million market cap. All right, so at this moment it has a nice run. If you can pull back and stabilize around between 25 half and 27 cents, if you like this, you can invest in this. So since I'm on this, let's check its competitor, which is also called in the similar industry, Capital Infrastructure Trust, which to me, I would rather invest in this. It's bigger, they own more assets, and it's more diversified. Not just in Singapore, they have also in Australia. Okay, and it doesn't have any stats here, but from what I've studied before, it's roughly giving about 6 to 7% yield, and it's trading at a discount. So that's all for the investors portion. Let's head on to the trader portion. For traders, what should we be looking at? This is Capital DC REIT. Personally, I wanted to invest this as an investor, but based on current fundamentals, the PE is at 32, with dividend yield of 3%. Price to book is way overvalued, at 2 times its assets. So in terms of investors, we won't be investing in this Capital DC REIT. But as a trader, if you want to trade this stock for capital gains, currently is trading a very nice pattern. All right, it's forming a very huge base, and if it were to be able to break out above this 253 price, then it's trading at an all-time high, and trading all-time high, which means to say there are less sellers and more people are going to come in, in a euphoric mode to buy up the shares. So if you are looking to trade this stock, you can look at the breakout, to enter the stock for a long, with probably a stop loss below this $2.35. Okay, this is Manulife REIT. It deals in office space, office properties in the US. So currently it's been trading in a very nice range, and it's getting very tight. Once the trading range gets very tight, it means to say it is going to explode soon. It's going to break off soon. Why is that so? If we imagine a spring, and we compress the spring tight, when we let go, the spring will just jump up. So this is what I'm expecting this stock Manulife REIT to do highly high probability is that it might break off on the upside, on the upside to break out with a explosive move. Okay, so you can look into this stock if you like this. It's currently giving about 8.1% yield based on its previous dividend, and its P ratio is about 22. It doesn't have much discount. It's trading roughly about book value. The same similar US office REIT, Capital Oak REIT USD. Okay, so I was looking to trade this, but I missed it. It had a nice move today. It broke off. Okay, so if you want, you can wait for a pullback, to enter into this stock. In the beginning of the video, I mentioned that the strongest sector is the medical equipment manufacturer. Now, this I've mentioned many times since 2 to 3 weeks ago. This is Riverstone. First mentioned is roughly about this bar when it broke off. It makes a nice run. It pulled back, and then it broke off again yesterday and today. With today continuing, making a high of 222. So right now, this is a euphoric run, and we should not be chasing into this stock. But what this has give us an indication is that we can trade other medical device stocks, and see if there's any opportunity, more like a laggard trading behind. So this is Top Glove, similar rival competitor to Riverstone. So it did a similar move as Riverstone. So we should not be looking into this, just to take note. MedTech International today had a run. It burst off this 20 cents resistance and its previous all-time high. So it make a nice move today. So in such case, we should not be chasing after stocks that's already moved off. What we want to buy is to buy somewhere in these few days, to get into the stock. So similarly, UG Healthcare had a same move, okay, the past 2 days. So what are stocks that had not moved in this medical space? This is Biolytics. All right, it has a move, but it has not break off its resistance. So this is something that you can look at the next 2 days to go into. This is Biolytics. If for those who do not know what Biolytic does, they basically manufacture COVID-19 test kits and export them to the US. Okay, and their associate, so-called distributor for COVID-19 test kits in Singapore. This is Clearbridge, so it has a similar move. So it make basically a same pattern as Biolytics. Okay, so if you want, you can look into buying into these stocks, and trade, look for the upside to break off this. So these are the medical stocks to look out for. Now, 2 weeks ago, I mentioned about Wilmar. Okay, today I've entered Wilmar, roughly about 392. It was done in a hurry, so I did not inform any of you guys. So this is Wilmar. This I'm trading in this on a short-term basis based on this run. This is a very nice run and it's trading sideways. So this is where I look to enter. For this is still forming in a consolidation phase. If it can do a sideways pattern in a tight range next few days, we still can enter into the stock. This is Wilmar. Last week in the video, for those who have seen it, I mentioned about Sri Trang Agro. This is a Thai company. So this has been a euphoric move. So we shouldn't be buying to this stock. We are chasing it, and it will be a high risk. But just to show that currently the commodities, food, uh, dealing in the upstream, meaning the agriculture, feed, milk products, these are the companies that are moving. So there's one company that caught my eye that has not run. This is Jaffa. Okay, so Jaffa has made a very nice base pattern. It's a cup and handle pattern. Recently, it has a good earnings, and that caused the share price to gap over here. So this is a very bullish move, and a lot of traders has already bought into these stocks in this area. So right now at this moment, we want to look at it to break off this resistance of 66 cents, and hopefully it can rise based on this base pattern, hit a target area, target price of 87 and a half. Okay, so this is Jaffa. As for Olam, this stock has been a little bit weak. The pullback has been deep, uh, but nonetheless, this gap down is due to dividends. Okay, so if it can start to recover to about 150, we can consider buying into this stock. If you think you like Olam more, but personally, I have Wilmar, and I'm looking to enter Jaffa, so I don't think I will get into Olam. Another that deals mainly in beer, beverages in the Southeast Asia region. This is Thai Bev. Okay, looking at the pattern, it doesn't look much fantastic, But what caught my eye is during this period to here, there is a huge volume happening on the downside. Meaning to say, there are people accumulating starting to accumulate in these stocks. Okay, in this area, you can see it's a small range because if it's a high volume, like similar volume like this, the range tends to be big, big range. But now it's giving small range, which means to say whatever sellers that comes in, right, the buyer are supporting it. Okay, and I think when this starts to turn, right, it might get interesting. Okay, so this is a stock that we can look at in the next few weeks. Now, in the next few days or probably next week, when Singapore starts to do its phase one reopening, I'm not too sure whether the casino is open. If you guys know, just drop me a text. Okay, and it has formed a very nice pattern. It's been tagging on the high side, with the resistance somewhere here at about 78 cents. And you can probably look at a short-term trade, if you break out, enter at about 78 half, 79 cents, and see if you could hit this about 84 half cents, and take our profit to run. Okay, and it's looking more like it's going to turn up. This is a 50-day moving average. Put in the 200-day. This is the 200-day. All right. So by this moving up to about 84, 85 cents is where it will meet the 200-day moving average. Is where we also be expecting sellers to come in from here. The sellers come in from here. Those who are stuck here will want to sell here. So we can only trade this small little move here. Okay. So this is for Genting Singapore. That's all that I managed to see for this week. What we can do, or what are the good opportunities to trade for next week. Uh, do you guys have any things to add or any question? Okay, Comfort Delgro, overall it looks weak. There's a very big down move, and currently is doing this like a flag pattern. Okay, so on a closer look, this up move, right, did not test this trend line, which means to say overall is weak. And if you break this trend line down, which is about $1.48, if it breaks down below this, it's going to move much lower. And in terms of fundamentals, right, ComfortDelGro will be facing a lot of headwinds. There are less travels, you know, less people taking buses, due to the COVID lockdown. So in terms of revenue, right, it's not really favorable for ComfortDelGro, which means to say their next quarter earnings in July, August is going to be quite bad. All right. So in this pattern is it shows me that it is still a very weak stock, and we should not be touching or buying into this at the moment. I'll go on to the summary. In summary, basically Singapore market has been very weak. This weakness is mainly due to the three banks, DBS, UOB, OCBC, and also Singtel. Singtel is weak. Plus some of the constituent stocks, like SATS, ST Engineering, SI Engineering, SGX. SGX today has a very big gap down because they lost their licensings to Hong Kong Exchange. And so because of all these stocks, right, they are weak, it has caused the market to be flat. Of course, there are some that are strong, like Wilmar, some of the property stocks, some of the REITs, Ascendas REITs and Capital Mall and all this, they are strong. So the whole Singapore market here right now in the big cap stocks are being flat at the moment. So in this situation, in summary, we should be looking at trading just the very strong companies, very strong sector like the medical that I've mentioned before, like Biolytics, Clearbridge that has not moved. Some of the strong commodity stocks like Wilmar, Jaffa, and probably Thai Bev and Genting. Okay, that's all for today. Thank you guys for attending this meeting. I will do some editing and upload this on YouTube. All right, thank you guys.